This is the Scrap Metal Commodities Recycling Report brought to you by BENLEE Roll-Off and Open-Top Trailers and Raleigh Goldsboro Metal Recycling, February 29, 2016. In this report, stabilization continued in most commodity markets, and one of the world's richest men had very positive things to say about the U.S. economy. Steel production in the U.S. came down a bit last week, but remains well above where it was just 2 months ago. Steel production is up a nice approximately 13% from the fourth quarter of last year. Oil rigs, major users of steel, continue their downward march. The oil rig count is now down more than 75% from about 16 months ago. With oil prices low, the oil rig count will not increase anytime soon, but should stabilize in the coming weeks. Scrap steel prices remain steady, and it is not clear what will happen to prices this week. 2 weeks ago, most were saying prices could be down a bit in March, but last week that changed to most saying no change, and some saying prices could actually be up a bit. Hot-rolled coil prices came down a bit as there is softening in some parts of the U.S. economy and imports ticked up a bit. Stainless steel scrap prices had a small uptick a couple weeks ago, but have now stabilized at their multi-month lows. Copper finished up for the week and is near a multi-month high. The 5-year copper chart shows some stabilization of prices, somewhat above the recent lows. This is of course very different after more than 5 years of falling prices. A key reason for copper steady prices are that the copper LME inventories are near 5-year lows. Less supply leads to higher prices and sometimes stable prices. Aluminum also finished up for the week and is near a multi-month high. And when looking at this 5-year aluminum chart, we see prices a bit higher than they have been in recent months. Aluminum LME inventories are near about 7-year lows, which explains the slight increase in prices. This chart is showing profit declines from publicly traded companies starting about 8 months ago. As a major positive, low oil prices have consumer spending up, which is helping the economy. But low corporate profits could mean economic trouble on the horizon. New home sales, which are a key job creator and an economic indicator, were down a bit in January. But on the positive side, home sales are about double what they were in 2011. And when looking at this chart going back to about 1960, we see enormous room for improvement in the years to come. In 1960, there were about 180 million people living in the United States. Today, there are about 323 million, and today we're building about the same number of homes as we were in 1960. Huge student debt, we believe, is a key problem for home sales. Students just don't have the money to buy a new home. In January, durable goods had their largest increase in 10 months, which is terrific economic news. Durable goods include things such as transportation equipment like cars and trucks, defense equipment, and appliances, all major users of commodities. We'd like to end with some quotes from the annual letter issued by Warren Buffett about 48 hours ago. He's the third richest person in the world and has investments as diverse as the Burlington Northern Railroad, Heinz Food Company, and Geico Insurance, the little green gecko guy. He wrote, "America's economic magic remains alive and well. For 240 years, it's been a terrible mistake to bet against America, and now is no time to start. America's golden goose of commerce and innovation will continue to lay more and larger eggs." With that, we hope all have a safe and profitable week. My name is Greg Brown.